All right, we're back for another Friday financial wrap-up without Mr. Michael Zuber. I'm flying solo today. Michael and Olivia are on a very well-deserved travel. They're in Alaska doing a beautiful cruise. Hopefully you've caught some of the daily financial news. Michael has been posting several times this week. So let's get right into the show. This is for August the 29th, 2025. I can't believe September's right here, Labor Day weekend. Let's get into it. So Realtor.com news posted and talked about a long, cruel summer. And guess what? That's no surprise. If you're selling properties, if you're a flipper, wholesaler, realtor, anything transactional, loan officers, title escrow folks, this has been a weird year for sure. Transaction volume has been down. This was interesting. For the month of July, 15% of all transactions canceled in the month of July. And this was the highest on record, for the month of July. So very, very interesting. Another interesting stat, inventory has climbed for 21 months in a row. 21 months in a row. That's record, right? It feels like just a few months ago, right? A year ago, a couple years ago, we were talking about low inventory, low inventory, low inventory. We're still, I would consider lower inventory considering over the last 30 years, but we are seeing inventory climb. We are seeing some price reductions. This was also interesting. The longest or the average days on market, the highest since 2015. Now, the average, this is a national average, 43 days on market. We see plenty of properties. I look at properties all over Northern California. It's very common. You'll see properties 60, 75, 90 plus 100 days on the market. So again, the market definitely is going through a shift. Now, Labor Day weekend, Michael has talked about this. I want to talk about it just a little bit from my experience as an active broker, investor, wholesaler, property manager, all the above. It's very traditional. We will see a lot of people pull their homes off the market the first, second, third week of September. Why? Because typically they have wishful pricing. People that want to sell versus people who need to sell, right? So I think, Michael talks about, he refers to it as delistings. And in the industry, we talk about expired, canceled listings. We will definitely see a spike in canceled listings. That will be something I'm sure Michael will be talking about in the daily financial news, weekly financial wrap up, that we will start to see delistings going into the month of September. Now, what is causing the housing market lockup? The reality is we've been talking about it for months and months and months. Interest rates and affordability, right? Higher for longer. We've had higher interest rates for a long time now. I think it's the new normal. I do have some good news to talk about in interest rates. Now, this was interesting. Michael shared this piece of news that the average median home payment is up $1,255 compared to 2019. Okay, that's in the median home value. So again, if you look at that, more than $1,200, the average mortgage payment in 2025 versus what it was in 2019 pre-pandemic. Very interesting. Affordability is definitely an issue. As the rates come down, we'll talk about rates in a moment. I think we'll start to see the market. I don't know. We'll talk about unlocking the market as well, and we'll talk about rates. But let's talk about Rosenberg Research. Housing starts were down 23.9% the last 6 months. Again, no surprise. We've been talking about that. The housing market is definitely slowing down. Michael's talked about a real estate recession and, of course, a crash, not a crash in values, but a crash in transactions. So, again, the real estate recession is real. Again, values are starting to soften, though. We are seeing properties, what I would describe as either average properties, outdated properties. Some people might use the word to describe mediocre properties that are just okay. We're seeing those are very soft. We're seeing price reductions. We're seeing those soft in price and value. But again, relative to the condition of the property. So time will tell. Now, the best part about this market is unlike 2009, the Great Recession, when we saw the mortgage meltdown, the difference in 2025 is there's a lot of equity out there. A lot of people can opt to just simply stay. Hey, we tried to put the house on the market. We wanted a bigger house. We're just going to stay. Also, I have lots of friends, clients who are saying, you know what? This flip property, we're not getting our price, or maybe it was a rental property. Hey, we pulled it off. We were going to sell it. They can just simply put it back and rent it. So unlike 2009, the Great Recession, there's still a lot of equity out there. And then again, I think most people who've bought over the last, let's say 12, 15 years, interest rates, even in this high interest rate environment that we're in today, people have fixed rate mortgages. There's not the variable mortgages like we had in 2009. So again, sorry to disappoint the crash bros. We're not seeing a market crash. So now this is interesting. The buyer demand, right? Buyer demand. There's a lot of talk about what is the interest rate that unlocks buyer demand, that unlocks the market. Now, many of you guys know the celebrity Shark Tank, Kevin O'Leary, Mr. Wonderful. He was spotlighted in this week. He was on a lot of news channels. We'll talk about why. But he mentioned and talked about that he believes 5.5% is the magic number with the 30-year mortgage to unlock inventory, unlock demand, get buyers active, to basically get this real estate market and transaction volume going again. 5.5%. Michael's talked about sub 6%, 5.9 rates. Time will tell. Now, speaking of Kevin O'Leary, speaking of Mr. Wonderful in the news this week, a lot of you know this, wealthy people hedge their investments, right? They protect their investments. They diversify with other asset classes, things like gold, silver, and then, of course, collectibles. Now, this is a very interesting topic, a topic I love. I was excited to hear about. Kevin O'Leary bought a trading card, basically like a baseball card, sports cards. I know a lot of you, maybe even Pokemon cards. I love baseball cards. I'm not necessarily a collector per se. But again, Kevin O'Leary bought a trading card, a one-of-one Kobe Bryant, Michael Jordan trading card for $12.9 million. It was a one-of-one. It was a 2007, 2008 Upper Deck exquisite collection autographed trading card, piece of cardboard. But basically what it was is the big feature of it was that it was a one-of-one. The other part of it, that it had featured a game-worn patch, a piece of a game-worn jersey from both players. In fact, let's take a look at it. Here it is, the one-of-one. Beautiful. That's $12.9 million. Kevin O'Leary from Shark Tank, Mr. Wonderful bought that. It's interesting, the PSA rating. This is also a big deal. I was with a friend this weekend. I was at a family party, and a friend of mine, he's made thousands and thousands of dollars. He was sharing with me, it's kind of like just a hobby of his, flipping trading cards, sports cards, football cards, basketball cards, baseball cards. So this obviously trading cards trending. Time will tell. Let's continue. I'd love to hear from all of you in the comments. Are you doing anything with trading cards, flipping trading cards? Do you know anybody? Also, if you do know about cards, I want you to guess. And this is something I did a little bit of research on. What do you believe the number two? This was the highest, right? 13 million, $12.9 million, right? As the highest transaction. Without Googling, if you're into cards, if you know, what was the prior record? What was the number one prior to this transaction, prior to this card trading at basically $13 million? Does anybody know, without Googling it, what was the number two transaction? I'll give you a hint. Vintage, what I would think an older card, a card that's older from the past. So would love to see in the comments if you're into baseball cards, trading cards. I might have even given you a hint there. What would be the prior record for the top number one trading card? So let's keep going. Another headline this week, Google, right? We've all heard of that company, right? 35% of middle managers of small teams have been laid off. And so very interesting. Is this a part of the AI revolution, right? Is this a part of, middle managers because of efficiencies, optimization? For Google to lay off 35% of their middle managers or managers of small teams. A very interesting headline. So let's keep going. Let's talk about the interest rates. Let's talk about the Fed. Now, the Federal Reserve is scheduled to meet on September 16th and 17th. I had a client today, shout out to my friend and client, Bill. He asked me, he said, hey, when does the Fed meet? I believe they're going to cut rates now. Well, now, based off of Jackson Hole, Jerome Powell's speech in Jackson Hole, he talked about, what to expect. And you know what? We have now an 84% chance of a rate cut. Some would even say higher, in the 90s, 100%. The real question, I think Michael talks about this, and he said this for weeks and weeks and weeks. I know you're all devout followers of the show. Michael's talked about, will it be 25 basis points or 50 basis points? Again, in the comments, let me know your thoughts. Do you think it's going to be 25 or 50 basis points? The other question is, or potentially, and this is my little curveball on it, if you will, 25 basis points in September and then 25 basis points in December. Let me know your thoughts. Put it in the comments. Would love to hear from you. Now, Morgan Stanley this week, another headline, Michael talked about it in the daily news. They're forecasting 100 basis point cuts in 2026. Now, they talked about 25 basis points in March, June, September, and December. So a couple of things. One is that, what is Morgan Stanley seeing? Okay. Michael's talked about it. Jobs. Why are we seeing the Fed? The Fed has clearly prioritized jobs over inflation. They're not hitting their 2% number, the average, right? The running average. We're probably trending inflation 2.6, somewhere in the mid to higher twos. But clearly the Fed, because of the job reports, right? Michael's been saying that all year. He's been saying that for the last 18 months, how important the jobs numbers are going to be in influencing the Fed, the economy in general, what's going to happen next. So Morgan Stanley, what are they seeing for jobs? What are they projecting? Also, Zandy, I believe it's Mark Zandy, Michael talked about this, projected that we would be going into an official recession in the first quarter of 2026. So I don't know. Time will tell. Thank God we got Michael doing all that work. And, he reads 2 or 3 hours a day. I get to show up on Fridays and jump in with him and surf his wave. So let's keep going. One thing I do know about is mortgage rates. I'm a little nostalgic on this. Interest rates today, as of Thursday, Friday this week, we are seeing the average from Mortgage News Daily. We're seeing rates at about 6.5%. Now, I want to show you this chart here. So I love this 6.5%. I love the headline, 30-year fixed rates officially, not unofficially, officially back to 6.5%. Now, in my opinion, this is probably the best news of the whole week, in that interest rates, if we look at from January 1st, right? So we were basically 7 plus 7, at one point even 7.25 in January. And then we've had a bumpy ride, and here we are now trending down into the low 6s. And again, depending on the product, this is an average based on survey for 30-year fixed mortgages. But again, we're headed in the right direction. That's 50 basis points. That's a half a point from January to today. And especially considering all the tariffs and all the different worries, this is really good news. I believe we are now officially trending in the right direction. So now, why am I so nostalgic about, this market? 6.5%. 6.5% was when I bought my first property in 1993. I had a 6.5% mortgage on it. That was my interest rate, a fixed 30 years, 6.5% interest rate. So why am I nostalgic? Even the way that the longer days on market, a lot of confusion, a lot of uncertainty. And I've said this before, and I'll say it many, many times. I really believe, again, in my 30 plus years, I started in 93, 94, became licensed as a broker in 94. This feels a lot like the mid 90s, the 1990s, where we had in this case in California, we had military bases leaving. So we had employment shifts in California. We had, in terms of what would be a recession, right? So we had recession, and we just had a time of uncertainty where property values were soft, rates were coming down. We had a very interesting time. And so like navigating the 90s, this feels a lot like that. And the beautiful thing is I didn't know any better then, right? When you're young and you're new and everything looks like opportunity, but I can tell you that 30 plus years, this market is shifting. If you're attached to transactions, agent, realtor, flipper, wholesaler, loan officer, title, escrow, support, home warranty, any of that, I believe that we are in the trough, meaning that we are in the bottom, that we will start to see things pick up. We will start to see, again, rates are moving in the right direction. I don't think it just completely unlocks, but I think that as we progress and close out 2025, going into 2026, a lot of opportunity. And also for investors, Michael's talked about this. Now, Michael says, I don't say, Michael says, disrespectful offers. There's a lot of aged inventory, properties with 90, 100 days on the market, properties that are soft. Now, what I would refer to when I represent buyers, I also represent sellers. So it's important to me. I would never want to disrespect somebody, but I will tell you that for investors, this could be a time to be aggressive, to identify maybe sellers out there who have lots of equity. They bought it 20 years ago. They bought it 15 years ago. They bought really, really low. For them to give you a discount is probably very palatable if they need to sell. If they need to sell, not just want to, not just curious, but really serious about selling. So lots and lots of opportunity. Let me close out strong here. I want to just share with everybody here. Michael has the best deal in town. The school community, absolutely amazing what you get. It would be the single best, probably the only $20 investment you can ever make into yourself. Now, I love this quote. I didn't know this quote was from Warren Buffett, right? We all know Warren Buffett, what's considered the greatest investor of all time. By the way, Warren Buffett, a couple of weeks ago, we talked about he's all in on housing. He's not all in, but he's basically up to about $1 billion with the home builder, with Lennar. Why is Warren Buffett going in on housing? Because he sees this as an opportunity. I'm guessing he sees something that maybe we're in the bottom of the trough, that housing is going to grow. Is it going to be a fast growth? Probably not. But when we see those interest rates start to come down, I think we're going to see the market unlock. In fact, I would love to hear from you in the comments. Where do you think we'll be January 1st with the 30-year mortgage? If we look and forecast out to the end of the year, what do you think that interest rates will be for the 30-year mortgage? I'm personally, I follow Mike's lead, right? Like I said, he does all the hard work. I get to show up on Thursdays or Fridays, record the show. I would hope that we're somewhere near 6%, 5.9, 5.85, somewhere plus or minus 6%, and ideally minus 6%. But this is interesting. Let me go back to the school community. I got a little excited about the rates. Warren Buffett, this was his quote: the best investment you can make is an investment in yourself. And really, what is he talking about? He's talking about education. The more you learn, the more you earn. The more you learn, the more you earn. So for $20 for you to invest into the school community, absolutely ridiculous the amount of value that you're going to get there for $20. Go to school, SKOOL. Hopefully, I believe it's in the show notes here on YouTube. $20. Try it on. Believe me, you're going to blow $20 this weekend on a cup of coffee and something to eat, on a breakfast, right? A muffin or something, right? The best $20 you can invest. And then also a really big push, the Vegas one rental at a time event. I think it is an absolute class act what Michael does. He serves lunch and dinner on Saturday, lunch on Sunday. It's Saturday, February the 14th, Sunday the 15th. That's President's Day weekend. So you have Monday to get home, travel, recover, whatever the case may be. And the beauty is that on Eventbrite, Michael and I were talking, and I said, hey, I twisted his arm, to be honest. I twisted his arm. I said, hey, you should just throw in a bunch of free stuff. You want to sell tickets. You want to get those first 100, those first early ticket buyers. Throw in a bunch of free stuff, man. So you've got 3 awesome bonuses. By the way, you can go to Eventbrite. You look up One Rental at a Time, and you look at he's on Eventbrite. You can buy your tickets there now. This event will sell out. He's got Pace Morby is going to be headlining as soon as the Sub 2 community hears about it, the Vegas Sub 2 community, this thing will sell out instantly. It's, Pace has got so much going on. I don't think he's really promoted it. And what he'll probably do is, as we get closer to the event, Pace will probably just kind of, hey, I'm going to be in Vegas. And then, well, how do we get tickets? I guarantee you this event is going to sell out. So get your tickets early. There's 3 awesome bonuses that Michael's throwing in. Number 1 is he's throwing in 2 courses, the Get Your Money Right course and then the Buy Box course. The Get Your Money Right course and then the Buy Box course. I also believe that as an alternative, if you wanted a $150 credit toward the courses and what he sells online at onerentalatatime.com, you can choose from that. But again, you're going to buy your tickets at Eventbrite, One Rental at a Time, the President's Day weekend, February 2026. The other beautiful bonus that he's thrown in, again, this is also where I twisted his arm. I said, Michael, offer an exclusive Zoom. This Zoom that Michael's going to do is exclusively only for the people who've bought tickets to the event, people that have pre-bought the tickets for the event. And what he's going to do is you're going to get 60 to 90 minutes with Michael. Now, the beauty is you're going to be able to ask him questions, live Q&A. He'll break down buy box. He'll break down, hey, should I buy in this state? Would you buy out of state? How do you build a buy box, Michael? Hey, I'm concerned about this. I've got this going on. Whatever it is, you're actually going to be able to get live in-person coaching in a group on a Zoom, and you will be able to get FaceTime with Michael in a Zoom live. This is exclusively only for the people who buy their tickets. I don't know the cutoff date, but I know there's a certain number of tickets he wants to sell. And what I would say is don't wait. Buy your tickets for the Vegas event. Folks, do me a favor. Message Michael. If you like the show, if you stayed this long, I don't know. I have no idea. Hopefully a few of you liked the show and stayed. If you like the show, let Michael know that. Message him on Facebook, message him on Instagram. Let him know that, let him know, not about this show. Let him know that how much you appreciate him. This guy works really, really hard. He probably spends about 12 to 15 hours a week preparing for the daily news. I get a little summary. I get to watch the daily news and build my own summary, right? And these notes are all from Michael. So what I refer to as my secret weapon. So if you appreciate what Michael does, let him know in the comments. Let him know. Send him a DM. Guys, have a wonderful weekend. Thank you for watching.